Good afternoon and welcome to the Mid-Market Pulse. I'm Holly, reporting to you live from 𝐊𝐶𝐞 Studios in Sydney. In this show, we'll take a look at the overall Australian share market performance by the midday trading session. We'll also explore the biggest winners and losers of the day before focusing on stocks that have grabbed headlines today in our final segment. And stick around as well for today's stock fact of the day right before the break. While the Australian share market extended gains in the afternoon trade as higher commodity prices edged material and energy stocks recovery ground. The investor sentiment was also propped up by firm cues from Wall Street, which climbed to record highs overnight. In a further boost to the market, a credit ratings agency S&P Global upgraded their 2021 global economic growth forecast to 5.9% on rising vaccination rates, setting an optimistic tone for the Australian economy as it seeks to avert a double-dip recession. And the ASX 200 was currently trading 0.36% higher by lunch. And earlier today, the index opened to green and rose as much as 0.5% to hit a high. On the sectoral front, 7 of 11 sectors were trading in the green zone, while the energy sector gained the most thanks to a rise in crude oil prices. Energy was followed by materials, utilities and healthcare, among others. Meanwhile, the IT sector was the worst performer by lunchtime, trading lower by 0.7%. Industrial, financial and telecom sectors also traded lower with marginal losses. ASX listed buy now, pay later stocks remained in focus after Facebook's potential launched its Facebook Pay product in Australia as a test market. With this new fintech innovation, users will be able to add a bank card to their Facebook account and pay merchants or friends within the Instagram or Facebook mobile apps. The business is a potential challenger to some services offered by Afterpay Square Cash App, assuming it all script merger goes ahead. With the competition this fierce, it'll be interesting to see how this plays out in the space. Well, moving on now to the COVID-19 front, and New South Wales reported a staggering 1,431 new local cases and 12 deltas in the past 24 hours. 12 deaths, the highest number of daily case tallies recorded in the state. Victoria also witnessed a spike in the cases as the number of infections rose to 208 today. So what does this mean for the state's lockdowns? Well, it might be too soon to tell, but needless to say, these numbers aren't looking hopeful. Back to the market now, and let's turn our attention to the biggest gainers and losers into the mid-market session. While the top gainer on the benchmark index was Australia's biggest independent coal miner, Whitehaven Coal, with a beautiful 4.5% gain. Some of the other notable gainers were miner Cobra, resource company Iluka Resources, biopharma major Mesoblast, and mining firm Pilbara Minerals. On the losing side, however, BNPL major Afterpay topped the charts by falling at 2.7%. And if you're thinking this crippling slip is linked to Facebook, well, you might just be on the right track there. Some of the other worst performers were Australia-based Bendigo and Adelaide Bank, corporate bookmaker PointsBet Holdings, fintech company Iris, and plumbing and bathroom supplier Reece. Moving on now, let's check out the shares that grabbed headlines today. First up, shares of software firm Technology One rose 2.5% on acquisition news. The Brisbane-based enterprise software as a service company has signed a deal to acquire Scientia Resource Management, a UK-based company servicing the higher education sector. According to Technology One, the cash-funded deal is likely to be worth up to $16.2 million if turnout targets are met. The transaction will be funded from internal sources as well. And next up, shares of a land lease group, an Australian multinational construction, property and infrastructure firm, traded marginally lower following an ASX update. The company has appointed Tony Lombardo as managing director of the company, and the announcement came just 3 months after it succeeded Steve McCann as chief executive from the 3rd of September 2021. Lombardo will be the managing director and global chief executive officer, while his terms of employment remained unchanged. Now it's time for today's stock fact of the day, this one concerning Facebook. Did you know who the first major investor to back the social media giant was? Well, the answer to that and more after this short break.
Hi there, James Preston for 𝐊𝐿𝐴 TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. 𝐊𝐴N's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on The Tech Beat, exclusive to 𝐊𝐴N TV.
Hello and welcome back. I'm Holly and you're watching the Mid-Market Pulse commentary. Zooming our lens on over to the companies that grabbed attention today. Before we get back into it though, let's get back to the fact about Facebook. Did you know that Peter Thiel, co-founder of PayPal, was the first major investor to back Facebook? That's right, Thiel saw the site's potential and invested $500,000 into the young company in 2004. He later sold his stake in the company for more than $1 billion. Not a bad investment move if you ask me. Well, back to the market now, and shares of AMA Group plunged a severe 9% after resuming from a trading halt on Thursday, pending a further announcement regarding its capital position. The company had announced today that it was undertaking a capital structure review in order to manage the short-term disruptions associated with the COVID-19 pandemic, as well as to find the best position for growth. AMA mulls to undertake the capital market initiatives in order to enhance its balance sheet flexibility, diversity funding sources, and extend duration. And up next, the share price of Mont Royal Resources rallied a very solid 14% after the mining company unveiled its plan to acquire a stake in Australian proprietary firm Northern Lights Minerals. The company, in an exchange filing, said that it'll acquire 75% shares in Northern Lights Minerals with the rights to acquire a significant land package in the Upper East Main Greenstone Belt located in Quebec, Canada. Its assets are situated in the Upper East Main Greenstone Belt, which is one of several Archean greenstone belts situated within the Canadian Shield. Mont Royal Resources will raise $4 million in conjunction with the proposed acquisition. Moving on now, and mobile security solutions provider DTI Group's shares traded a stellar 5% higher on plans to raise $2 million via fully underwritten entitlement offers. The capital will be raised by way of a 1-for-3 non-renounceable entitlement offer by issuing around 111.7 million new shares at 1.8 cents a share. A renounceable offer is issued by a firm to its shareholders to buy more companies' shares, usually at a discount. Meanwhile, shares of Tombola Gold gained 2.5% as the company plans to commence mining at Comstock Gold Mine. The Comstock will be the first gold mine Tombola will bring into production. Under the current plan, the operational team expect to commence mining of the Mount Frida gold mine within a week of the regulatory approval. The company has appointed Dan Mundy, the founder of Minecraft Holdings, as the mine manager of Golden Mine and Mount Frida gold mining operations. Meanwhile, internet-based cybersecurity marketplace Whitehawk saw its shares rising a handsome 7% following an ASX update. The company said that Dun & Bradstreet's public sector has entered into a co-sell agreement with Dun & Bradstreet, a leading global provider of business decisioning data and analytics. The Dun & Bradstreet public sector solutions business includes global government organizations, state-owned enterprises, higher education and healthcare markets, as well as government-focused businesses. And lastly, shares of software and services firm MOQ traded flat after it announced a sale of its wholly owned subsidiary Schoolbag. The company has executed a binding agreement for the sale of 100% of the shares in Schoolbag, and the sale is expected to be completed on or before the 30th of September, subject to certain conditions, of course. The cash proceeds from the Schoolbag transaction will increase MOQ's cash position, which is an important enabler of the company's future growth strategy. The divestment of Schoolbag, which is a non-core asset, will allow the company to focus on cloud-centric technology services and solutions of business, according to Joe Dadio, CEO of MOQ. Well, that's a wrap for now, but keep watching 𝐊𝐴𝐚 TV for more trending market updates. Holly Shields signing off.